The block finale was a raging disaster. But more than that, it gives us a clear indication of where the housing market is headed. And where's that? Well, it ain't up. I'm Biko Konstantinos, and that's what we're going to talk about today. Let's have a quick recap of the results. Now, all houses had a reserve of 4,080,000 and Oz and Omar won, selling at auction for nearly 1.6 million over reserve. Second was Rachel and Ryan with 170,000 over reserve. Third was Tom and Sarah with 20,000 over reserve. And both Dylan and Jenny and Danker and Sharon both failed to sell their houses at auction. Now, those results were an unmitigated disaster. Now, I did a couple of calculations. So the winners with 1.6 million over reserve made about 200,000 per week for the 8 weeks they were building the house. Now compare 200,000 a week with absolutely zilch every week for 8 weeks. Something just doesn't add up. But that's not our concern. What do these results show us about the state of the housing market and where it's headed? Now, fair enough if the results are volatile and they're up and down and here and there. But if you only have one standout result and the rest are abysmal, it's a very clear sign, in my opinion. Investors who would normally be happy to massively overpay just to buy a property on primetime TV didn't want to come to the party. Now, I believe there's two major factors that cause these terrible results. Now let's consider these factors and what they could mean for the housing market going forward. One of the biggest factors is that borrowing capacity has been smashed. So basically, the amount that you can borrow now compared to when rates were at all-time lows is more than 20% less. So previously, if the bank was happy to give up $1 million based on your income and expenses, now with those same income and expenses, the bank will only lend you 700 and something thousand, which is a massive drop in less than 12 months. So with the block houses asking for more than 4 million, there's a number of people who might have been able to borrow that 4 million 9 months ago, but now the banks might only offer them 3 million, which really is a huge drop and has the overall effect of reducing demand for property because in general there are less buyers who are able to afford the seller's asking price. And in my opinion, the Reserve Bank of Australia has kept interest rates far too low for far too long. For decades now, they've been ultra low, which has the effect of inflating house prices and encouraging bigger and bigger debts, which is why Australia is one of the most indebted nations relating to property. So now that we've raised interest rates closer to the long-term average, which is around 5%, mind you, and we only have an official rate of 2.85, and everyone's freaking out because mortgage payments are going up, you know there's something gravely wrong. Why it's so wrong? Because if our official interest rates went to, say, 7%, that would mean mortgage rates would be around 9.5%. Basically, the Australian housing market and economy would probably collapse. Now, that's only at 7% official interest rate, which is only 2% higher than the long-term average. So as a nation, why have we painted ourselves into this corner? In my opinion, we've become obsessed with always having to have a strong and growing economy, with propping up the market with government intervention, and making sure that house prices are always going up because that makes 2/3 of all of Australians who own property feel more wealthy, which means they spend more, which benefits the economy, and governments get elected on strong economies, etc. But the trouble is, more and more people now don't own a property, so you can't just focus on propping up the housing market to keep the economy strong. Ultra cheap monetary policies, when they're pursued for far too long and constantly kicking the can down the road, can actually destroy economies. Because when you have an economy like Australia that's so heavily distorted towards property, if there was genuinely a housing crash, the economy could collapse. And yes, you can kick the can down the road, but once that road ends, the can can't be kicked any further. And we can't think that housing will boom forever. We've had an amazing run for over 30 years, but there's no guarantee that the next 30 years will be the same. And if you think this couldn't happen, check out what happened to Japan since the boom of 1990. It's been 30 years and housing's only starting to regain that price levels where they were 30 years ago. Wrap your head around that one. Keeping ultra loose monetary policy is like sprinkling a little bit of cocaine in everyone's coffee. Slowly but surely, everyone becomes addicted. Addicted to what? Cheap bloody money. Never-ending house price rises. Talking about property at every barbecue. And salivating about how much your house is worth. So borrowing power has been slashed, and it's still much higher than the historical average. Before financial deregulation, banks would often require at least 30% deposit to purchase a home. So you had a huge deposit requirement and you had much higher interest rates. And that meant that house prices were way cheaper compared to the average wage. Because when everyone can't borrow as much, house prices just can't skyrocket. But since financial deregulation and ultra cheap money, we've seen a debt-fueled housing boom. And that's part of the reason why someone's able to buy a $4 million property. And if the average wage is around $90,000 to $100,000, that's over 40 times the average wage. Which brings me nicely to the second major factor for the housing market that the block is highlighting. And that is that house prices are just far too expensive. Sydney's been ranked as the second most expensive housing market in the developed world. And Melbourne's been ranked as the fifth most expensive. How can that be in the land down under where the great Australian dream was just to own a home with a yard? It's that sprinkling cocaine factor. When house prices rise so much faster than wages and gains from property have so many generous tax discounts, it all but ensures massive speculative demand. Trouble is, properties become so expensive that you either have to have an amazing income or already own property to be able to keep buying property. And that was clearly shown in the block finale. People purchasing those $4+ million properties would never have been able to do it just on a $100,000 wage. So the very sad reality is people on an average wage, and by average I mean $90,000 or $100,000, which really is great income, are finding it very difficult to purchase their first home. And that there is a tragedy. In my opinion, all hardworking Australians should be able to afford their own home, so they have a safe dwelling place and are free from eviction, etc. But by allowing house prices to continually skyrocket, we've actually taken the Australian dream away from many Australians. And that is un-Australian. For first home buyers with no family support, it could easily take 10 years or more to save a 20% deposit on a home. And that means being able to save a significant portion of your income every single month. But with rents skyrocketing, that's becoming harder and harder. So crazy house prices is the major factor that's preventing people from being able to afford a home. Now, if you already own a home and it's gone up massively and you've got great equity, it may not be too hard to buy another house. But if you're just trying to work a wage, you're paying tax on that wage, you're paying tax on any savings interest that you're earning, or any shares or any other investments. So the challenges of buying that first home are very real. So because house prices like the block are so crazy expensive, the pool of people who can afford them is reduced. And that could be another reason why the block finale results were actually a disaster. If house prices continue to grow much faster than wages, it's going to widen the gap between property owners and non-property owners, but it's also going to mean that the pool of buyers for those expensive properties is mostly going to consist with already property owners, because houses will become more and more out of reach for those who don't own a property if property prices continue to soar. So that will lead to more and more people not owning any properties, but an increase of those who own multiple properties. And as a nation, I don't think this is what we want. So the block auction disaster has shown us that borrowing capacity has been slashed, housing's just far too expensive compared to the average wage, and if interest rates continued to rise, there would be a major crash in the housing market. But as we've said, Australia is so dependent on housing for the economy, it's very unlikely that interest rates will rise too high. So in a way, the block has highlighted how Australia's housing market has become dependent on ultra loose monetary policies like super low interest rates, and that our economy as a whole is far too dependent on the housing market staying strong. And for me, this is a major risk because the crazy housing growth we've seen in the past 30 years is just not sustainable, and one day we might just see a Japan-style crash. So we're better off addressing a housing affordability now than kicking the can once too many times and seeing an absolute collapse. I'm Biko Konstantinos.